Hi, everybody. Welcome back to Freelancer Finance. Today, I just want to cover a couple of stocks that are looking real good, and maybe they should be on your watch list. In fact, they're getting to the point where you got to think about DCAing in. So before we go on, please just like and subscribe. It really does help us. We're trying to hit 600 subs. We're going to have a special guest for you coming up soon. We won't say who it is. You all will know it. And if you follow our Twitter, you might know who it is already. Okay, so let's get to the stocks. Okay, so here we are, very good food company. Everybody loves this little gem, at least the YouTubers do. Market cap still at a low 200 million, but I did cover this in a separate video that I can link to in the bottom of the description. But basically, at this point, the company is overvalued, and next year we hope it won't be with all their food production. So besides going into the past, and you guys can watch that video and learn about the very good food company, what's happening now? Today, they actually pumped because there was some news. They applied for a listing on NASDAQ. So Very Good Food applies for a listing on NASDAQ. And it pumped. How much did it pump again? Let's see. It went up 14%. That's pretty good. I don't think this is sustainable. We'll take a look at the chart, but news like that of them possibly doing something at some point in the future, I don't know how long that'll last. I think that's a good pump, and then it might actually get back down to reasonable levels. Okay, if we're to look at the chart, what's happening, we can see obviously very good food company, VRYYF, the ticker, is on its way down. In fact, even with today's pump, it still is not broken past the purple top line I have here. So if you look at this line right here, it's still looking very bearish because the 21-day, it's still under the 21-day, even after today's sort of rally. So for it to become a bullish stock again, it has to cross this purple line and start trending up, because right now everything is trending down and under the 21-day. So as you can see, it did bounce off of support here. And this is the trend line from the beginning of the stock. I sort of picked the spot. This is sort of arbitrary too. Don't take this as face value. You should do your own sort of analysis. But I consider this line a good indicator of where the stock is trending over time. And it's bouncing around this area. So, and in fact, today, because of some good news, it's above this trend. So let's hope it holds. Or actually, let's hope it doesn't hold, because we want to buy it cheaper. But if it does hold and it stays in this channel, we can see a breakout sometime in maybe November if we're lucky, and they have some bit of good news, like they started ramping up their facility. But if it doesn't happen, and I honestly think it's not going to happen just yet, I think there's going to be some bearish news for the next month. If the stock market is weak, and the stock can't cross this 21-day, and it can't cross above this purple line. So there's a lot of things going against it, that the chart itself is bearish. I think we can be going down to 155. So I'm monitoring this all the time. In fact, I have a buy order in for 155. I might be buying a little bit higher if I see something turning around. Even today's price at 211 is a good price, honestly, for the long-term investor. So I'm already in this play, so I don't need to be rushing in. So I'd rather get a better price at around 155, 160. So I'm willing to wait. If you don't have any shares, you really should start considering about DCAing into this, because this is really at the bottom. Like, how low do you think this can go? Yes. Okay. Let me take that back. They can go bankrupt. That's true. But at this point, they're showing they are selling food. They're growing their facilities. They're opening up different markets. They're moving to the US. There's a lot of bullish factors in play here. So for anyone thinks that they're going bankrupt today, tomorrow, in a month, it's very unlikely. So I don't think it's dropping below 155, at least in the short term. If next year they haven't built out anything and they're losing market share, well, that's different. Well, not even losing market share. What if they're just not making the product that they promised to make? Okay, so right now we're at an interesting inflection here. I'm waiting till it goes a little bit lower, till 155, because I already have a bunch of shares. And if it breaks up, well, so I don't get my whole allocation. Okay, that happens. It's possible. For anybody else who doesn't have any allocation, you should really start thinking hard if you want to be in this for the long term, because can this go lower? Yes. Can it go under 155? Absolutely. And I'll show you why. Look, if it breaks this 155 line, then, it's going down to $1. And I've covered this in another video, which, like I said, I'll link in the description. You can check it out there. Zillow Group is the next stock we're going to cover. And we're going to make this sort of quick, just covering three main stocks. Zillow Group is Zillow, of course, and current market cap 22.98 billion here. Short interest is low, and because everyone sees that this is a quality company. So whereas Very Good Foods, okay, Very Good Foods we can say is a quality company, and I think long term it might be, but right now it has not proven itself. Zillow, on the other hand, is a quality company. They are actually making a profit. We have a whole video about it. I'll also link to that in the description. And I think if you click up there somewhere, maybe I'll put that up there. Is this a good time to buy? Let's look at the chart of Zillow. We covered this in depth in another video, but check it out. So we still are under the 21-day and underneath the trend line as well. The stock market, let's face it, for growth companies is looking like a turd. All right. That's okay. As long-term investors, you should want it to go down. I know this is a controversial statement, but we want this to go down. We don't want this to go up. How many times do I have to say this? We do not have infinite money. The only thing we have is a little bit more time to collect some of these great assets. Zillow is one of those great assets that if you're not looking at it, I don't know why. I don't know why you're ignoring it. You might have a problem. I don't get it, because this is a really good company that's going to be ultra profitable in the future. It's already profitable, but I'm just saying that for me, this is a 5 to 10x easy over the next decade. I'm not talking about the next year here. All right. And it's an easy double. Honestly, in a year or two, this is an easy double to get back to its all-time highs. Let's see where the all-time highs were, just so everybody is on the same page. Look how far we've fallen. Oh my goodness, $208. You get to pick up the stock for 85 bucks. Okay. I'm telling you, this is a clear winner. In my opinion, not financial advice. It's a clear winner. Okay. I'm just making that clear. Last company we're covering is iRobot, and nobody loves this stock at all. I mean, literally nobody cares about iRobot, but I have a whole video on why it's such a great company. I'll link it once again. I'll link these three videos so you can check them out. And the short interest is almost 30%. Honestly, it's as bad as FUV at this point. That the short interest is massive. And the fact that's weird is that this company has an actual earnings. They make money. The market cap is basically dog poop right now. It's 2.24 billion for a company that's profitable. There's a whole bull case I go into about the robotics as a service. So I think this is a great quality company, and the lower it gets, the more I want to buy it. So at 75, I already have shares, just to be upfront. At 75, I'm buying again. And if it keeps going down, well, I buy some more. I don't think it's going to go down that crazy. And we'll look at the chart and show you why. So here we are at another chart, basically straight, a nice 45 degrees down. Growth stocks are being totally smashed. This hit as high as 100 and a little bit higher, maybe. Let's see. Oh, it went all the way up here. Almost 200 bucks. Okay, so it almost hit 200 bucks, and now we're talking about a $78 stock. In terms of the drop, it looks similar to Zillow, but in actuality, these are two different companies, obviously, and this is a $2 billion company, while Zillow right here is a $25 billion company. Here, $22 billion company for Zillow. So iRobot here, the chart is looking bearish as well. We are like riding the 21-day here. Let's get a little closer look. Yeah, I mean, we're still under the 21-day. We're under the main trend line here. We've broken this other support that I had. I think we're heading to $75. We can be going to $72. And honestly, there's another, a bigger trend down here, which is around 60 bucks. So I think it can fall as low as 60 bucks. But if I look at its history, just let me show you real quick the history of the chart. Okay, so just to show you the weekly chart, you can see that it does fall and touch the green line at certain points. And it did back in March of 2020. It did in the beginning of its life, and then it sort of stayed in the middle. Here's the orange trend line where it sort of bounces off. So at this point, at around 75 bucks, I think it's a good price to get in, or at least start accumulating around there. And then look, if it goes down to around $60, then I think you're lucky and you should just pick it up, because the upside here is around $240. That's where it looks like it's going. And this company actually makes a profit. So I don't see why they can't get there. So the lower it goes in the interim and it hits 60 bucks, just to bring up a calculator. I love calculators. Let's say it hits around 240 in a year and a half, 2 years, whatever it is, divided by, you buy it for around 65, you average it in, you have a 3.5x to 4x. So you put in 10 grand, you make $37,000. That's not a bad return, of course. You could put in more, you could put in less. I'm just giving some figures here that I think will be hit reasonably. In fact, if I was to bet on one company hitting 240 sooner in terms of just this 4x, I would say iRobot has a good chance, because they are totally being undervalued. And I went over in depth in a video about why. The price to sales is total garbage right now. Let's take a look, in fact, before I end this video. 1.38. And if you look at growth companies here, just to get it a little bit closer, the current price of sales is 1.38. Market cap is 2.24 billion. The PE ratio is 20. Is that great? For growth stocks, it should be around, they usually trade around 20, 30. So some more, some are 60, 70, 80. So up to you if you think this is a good deal. I think it's a great deal right now. And at $75, I'm buying more. That was it. Those were the stocks I wanted to cover. Please hit the like and subscribe. We're trying to hit 600 subs, and we're hoping to do that sooner than later. So if you like any of this and you want to see more, tell us what you like. And if you like these also quick videos, if you want to cover stocks fast and just go into the charts, I think I want to do like a lunch hour special breakdown of just companies I'm following. All right. Thanks a lot, and see you on the next one.